Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Today's date, Monday, August 18th, 2014. Let's get this party started. Markets today rallying again. And this is no surprise if you've been following my calls, whether it's in the daily analysis video inside the Research Center for premium members, where I've given out plenty of trade alerts we've made a lot of money on, or even in these free videos here. Now, bottom line is, markets continue to move higher, and I suspect that you will see more upside over the next week and a half to 2 weeks, leading into the holiday weekend. Remember, the first weekend in September is a holiday weekend, 3-day weekend. The markets generally float higher on light volume in late August into that holiday. Now, it doesn't mean you're not going to have one down day here and there. I mean, that's going to still happen, just like Friday, right? So Friday we saw a panic and then a sell-off and then a bounce back. That could easily happen again, but overall you're going to see the trend of the market move neutral to higher going into that holiday weekend. All right, today a big feat for the NASDAQ. It looks, as long as it stays up above 4,500, to close above that level for the first time in years. And I'm talking about many, many years. If I go to the Qs chart here, take a look at the Qs today, which is the NASDAQ 100. A fantastic day. If I flip over to the daily chart, you can see it's at short-term highs up here. And if I flip over to the monthly chart, take a look at that. All right, you're actually not that far away from the double top, which was in 2000 to 2001 right there. All right, and that double top, get this, guys, 103 on the NASDAQ 100. So pretty cool stuff right there to think about in terms of potential double top, which is, again, only really about 6% away on the NASDAQ. Could we hit that? It's honestly possible. And we're going to keep looking at the charts to find out as we get closer and closer to that level. All right, couple other things to go over. We have, obviously, the markets, again, staying relatively near the highs of the day. If we flip back to the SPY here, let's flip back to the intraday. Markets unbelievably light volume today, 46.7 million right now. And again, that's on par with what we saw last week. Now, today I did take profits on a swing trade. And again, the swing trade was Yahoo. So I took profits right here on the opening push, right near the highs of the day today. We pocketed about a 5.5% gain in a matter of a few days on Yahoo. If you remember on Friday, guys, if you're a member, we made money on 3 trades. I took profits on Cena. I took profits on the VXX and another play out there. We made great money there. It was the EWG. So if you guys remember, I've been talking about being long the EWG, which has just been a beautiful one. We took profits right here at the highs on Friday off of this, which was a beautiful gain. Cena off of earnings. I held it into earnings. We took profits right here at the highs, which has been a great play so far, continuing to take those profits. And the VXX we bought on Friday. Check this out. We bought it right here at the lows on Friday and sold it right here at the highs. All right, I literally sold it for, I think, a 7.5% gain intraday as a swing trade. And this was given out as a swing trade, meaning I was expecting to hold this. And ultimately, boom, 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 it pays us off quickly. And these, you might say to yourself, well, where are we getting these calls? You have to be part of the Research Center, folks. There's a 7-day free trial. Kind of a stupid thing not to take the 7-day free trial, considering how much money you would have just made on Friday alone, let alone today when we took profits on Yahoo's trade that I gave out last week. All right? Now, a couple things to go over here. We talked about market projections and where the market will most likely go over the next couple weeks. I'm continuing to follow some key trades out there. One stock that is selling off today, or one ETF, you can see the CORN, C-O-R-N, which has had a big rally over the last week or so, is pulling back sharply today. And this is interesting because look at the CORN. So here was your gap fill and your previous pivot highs, right? So Friday you hit that, and then you pierced it today and then sold right off. But notice how you're staying above the 20 moving average. So this really becomes interesting in the next couple days to see if this ETF can hold the 20, and if so, can it build back up? And if it gets, this is going to be your new break point. So this blue line, this gap fill, if you close above that in the next week or two, boom, to the upside. It should really rip all the way to the 50 moving average. My guess is it will do that. But again, today, a sharp pullback. Remember, this has been under a lot of pressure. If I zoom out, I mean, look at this chart just in the short term since May. Down from $35 to really a low of almost $25. And if we zoom out even further, look at where this thing has gone on the corn. This is corn, the commodity ETF. So it takes a lot for it to kind of reverse. When it does, you'll see a big short squeeze, but you got to get through these key levels. Step 1 was the bottoming tail and break and confirmation above the 20 MA. Now step 2 is going to be this break here through that level. All right, so we'll follow that very closely. That's going to be an interesting one. Another interesting trade potentially setting up is on the USO. USO under a lot of pressure again. You can see it's down into a little bit of support. I actually think it's going lower, guys. My target short term is going to be a Pierce of 34. 34 is going to be a really nice level on the USO, which is the oil ETF, if it gets there. Okay, so watch that very, very closely. A couple other things to watch. Apple. How do we not talk about Apple as it nears $100? I've talked about getting above $100 for quite some time. A lot of non-believers that it would get there, but ultimately I still am in the camp that it will, and I will not touch this as a short until it gets above 101, actually. Once it gets to 102, 101.50, maybe 103, that's really where you start to get interested, because that's your longer-term double top. If I zoom out on the charts here, you can see very clearly, here's your pivot top, which is just above 100, right? So again, just above 100 even number at around 100.5 is going to be your all-time high. But remember, in my opinion, these charts usually pierce the highs, then they get a lot of new buyers to jump in as it pierces, and a lot of people say, oh, it's a breakout, it's a breakout. They jump on board, and then that's where the distribution comes in, where the institution starts selling into those new buyers. And that's usually where they're left holding the bag. So my estimation is we'll go up probably to about 101 and change. And then when I see the momentum, I'll analyze specifically where I want to take the profits. But right in that vicinity, it should be a nice little level. Okay? All right, so that's what we have on Apple here. Let me take a look at a couple other things. JP Morgan Chase is having a decent day. JPM is trading up. Notice the highs of the day from Friday and today. This is a daily chart now we're looking at on JPM. Right into these moving average. So it's pounding on that. The question is, can it get through it? If it gets through that, it clears a line right to this gap fill at around 57.70. And if it gets through that, I mean, you could see double top pretty easily up here. So we'll watch that very closely in the short term on JP Morgan Chase. Baidu, in terms of looking at Chinese plays out there, Baidu is up 50 cents. Really not that great of a day on Baidu. I still think that this pattern is slightly bearish. If you look at Facebook too, take a look at Facebook. Up $1 today, it's a nice day, but this move is actually somewhat on the bearish side. So I think down the line, I'm not really looking to short a lot. I'm willing to take stabs in this range on specific stocks if I have a major level hit, but for the most part, I'm looking to see what I want to short towards the end of next week. And that's what I'm going to be looking towards doing. And again, one thing that I think the last week or two really shows you is that we're swing traders. I'll short stocks when the charts are appropriate, and I'll buy stocks. Like lately, I've been a big buyer of stocks. Over the last week and a half, 2 weeks, we've been buying, whether it's Yahoo, whether it's Cena, whether it's EWG, whether it's a Sprint, whether it's other things like that I've kind of accumulated lately. I'm okay doing that if the charts are telling me that's the direction it's going. If the charts are telling me we're going to get a pullback, like when I bought the VXX, which is really a short the market because it's the fear index, right? When I picked that up on Friday, I had strong signals telling me the market was going to dump out. And we made about 7%, 7.5% in a matter of 2 hours. So it's all about focusing in on these charts and letting them tell you which direction. You never want to be a perma-bull, perma-bear. All these talking heads on the media are perma-bulls, perma-bears. Very hard for them to switch over. We just want to be a loosey-goosey kind of trader here, buy this, sell that, and just make money left and right. And that's the beauty of the niche that we've found here, and it's amazing how the profits continue to stream forth. And if you go to the In the Money Stocks website, folks, under free market action, on the top of the website, the tab, you have the Research Center track record. All right, 378% this year. 378% this year. Now, again, that's if you put all your money in each play. If you put 10% of your money in each play, you're up 38% for the year. Think about that, 38%. And what's the S&P doing this year? Basically up a couple percentage points, and it's been down a couple percent up. And think about that. Think about the average. The average hedge fund is returning a couple percent so far this year. Think about that outperformance. I mean, just blasting through these hedge funds who stink. And again, a majority of hedge funds, honestly, they're not that good. They're not that good. They can't read the markets like we can. And this is, again, why some hedge funds have actually come to us, and we help them a little bit, and they're the ones that are outperforming. So, there you go. In any case, looking at a couple other things here to finalize, let's go back to the SPY and just look at the intraday, see if there's anything else bubbling up. But again, for the most part, expect the market to be neutral to positive. Small pullback days are expected in the next week or so just because the markets are short-term overbought in the last week or so. But again, you can just see very, very clearly here, the markets are now consolidating sideways. They're really not selling off, and that sets the table for potentially more upside. All right, and again, very quiet, volume light. As long as volume stays light, that bodes well for the upside as well. Really, the only thing that could derail the markets going into the holiday weekend would be a Russian incursion again, or some sort of invasion into the Ukraine. If that does happen, of course, the markets will sell hard. If that does happen, I've actually positioned myself kind of using options in a way for a great opportunity there. So I think that's the key, what you have to look for and continue to rifle through, and the profits will come. So come take the 7-day free trial here at InTheMoneyStocks.com. Nothing to lose, folks. It's free. And again, join us and start profiting like our members are. Take care, guys. Again, thanks again for watching.